As uncertainty around tariffs rises, many of you may be worried about your own finances. I'm joined by two financial experts to talk about what people should do in these uncertain times. And today, we're going to answer some of your questions. Michael Martinez is here from the Pension Group, and Daniel Tetrick is here with Ross Wealth Advisors. Both are based in Columbus. Thank you guys for joining us. Our first question is, we'll start with a question from a viewer. Can you explain what tariffs are and how they impact our economy?
That's all we've been talking about, tariffs with our clients. And, it's obviously a way that President Trump feels that a lot of our trading partners globally are not, they're allowed to bring goods into our economy, and we're not, there's no tariffs on, or there's not as much tariffs as what they're charging the U.S. So it's certainly having some impact. We've seen that well over a month ago, and we've seen some deep sell-offs the last 2 days in the market. The Dow being down about 1,500 points each day, overall. But it's going to be a bumpy ride here for the next few weeks. But really tell people not to panic.
Tariffs are essentially a tax, right? Explain that and how they work.
Well, I mean, it's a tax in a sense where, when China brings goods over here, they're not paying as much in a tax to bring their over here. But China, as an example, charges 35% tariff already on U.S. goods. So when we sell goods over there, our goods and services are more expensive. So what Trump's trying to do is just bring things in line. But now with today's recent reciprocal, or what China ended up saying, they're going to tax the U.S. an additional 35%. So we can be getting into a little bit of a trade war imbalance here. But certainly we're going to see how things pan out within the next few days.
Okay, let's go to question number two. When the stock market takes a major hit, people get nervous about their portfolios. What advice do you have for people who have 401ks and IRAs?
Don't make any knee-jerk reactions. So, market declines are, volatility is going to be a very natural part of any market cycle. So sometimes the downward shifts happen very quickly. So there's really no reason to completely pull off your investments off the table, because it can recover that quickly as well. So long term, if you miss the 10 top trading days in about 20 years, it can significantly affect your overall performance long term. And those top trading days come hand in hand with some of the top loss days. So don't make any quick knee-jerk reactions. It might be an opportunity to look at how your portfolio is positioned, maybe do some rebalancing, but don't do anything major, because long-term stocks do win out.
Michael, anything to add to that?
Eventually there's going to be a buying opportunity. There will be a bounce in the market. So, if you haven't had everything invested, maybe you've had some money in cash, CDs, things along those lines, there's certainly going to be there will be a bottom to this, and the market will recover. It's just going to take some time. And I think it's probably going to be about a quarter. The majority of the viewers out there, their biggest assets are 401ks. Maybe people don't have pensions.
Right.
It's the 401k, and we can actively manage a lot of corporate 401k plans with Brokerage Link, giving them more options. So people can certainly reach out to us if they have an interest in reviewing their 401k, because a lot of people don't know what they're doing. Like I talk to people all the time, how'd you pick that target date fund? Most people don't know. It's like, well, if you didn't choose it, the company picked it for you, and having 30-40% of your money overseas. Certainly international is performing a little bit better right now this year, but 16 out of the last 17 years, international has underperformed the stock market as far as the U.S. equity market. So we really stress to our clients to reduce international exposure, especially now with these tariffs. We may be seeing a reversal. Obviously, we're not seeing it today, but again, don't panic. But if people want a second opinion, they can certainly reach out to us.
Same with you.
Absolutely, yes.
Yeah, don't panic, buy or sell. I guess that's the bottom line. Our next question: financial planners are always encouraging people to diversify in their investments, and you sort of spoke to this. As it pertains to 401k or Roth IRA, what should you do and what shouldn't you do?
So I think, at least for Roths, I see those as the last money you're going to spend, because those are the tax-free assets. So you want to have those positioned as well as possible for long-term growth. So that might be have a little more volatility, knowing that long-term those are going to be coming back and giving you the most benefit for that tax-free growth. So even if you're nearing retirement, having your Roth positioned aggressively could be very beneficial long-term, because you're going to build that tax-free asset faster over the long period. Because even if you're retiring now, you still have 10, 15 years of Roth tax-free growth when potentially you're going to be cash flowing your retirement out of your 401k or tax-deferred assets. So I'd say keep the Roth positioned aggressively, and then it might be a rebalancing opportunity in your 401k or other tax-deferred accounts. Like Mike said, maybe peel away from the international or target fund dates and a little more domestic and stock exposure. But there's definitely a time to rebalance.
Michael, you want to add anything?
Well, I would say, when the markets drop, I think that's really one of the better times to really do Roth conversions. Because if you think about it, when do I want to pay tax? On the higher amount or the lower amount? So, we often have those discussions with a lot of clients, people calling in from radio or people, calling from TV as well that see us. But, start looking at your strategies and saying, well, maybe this might be a good time to start doing that Roth conversion now because asset values that come back. When's the best time to buy? Well, when the market's down a little bit. We're not calling a bottom as of today, but certainly I think things will with negotiating with Trump and all the different countries around the world. There's going to be some give and take, and just as the markets have dropped the last 2 days here, all Trump has to do is put something on X, and the markets can shoot back up rather quickly. Yeah. So keep that in mind. Don't panic, but certainly Roth conversions is certainly a strategy for a lot of people who are in or near retirement. Who doesn't want to get tax-free income? We all do, but if we can do it at today where the markets are down, we pay less tax on that conversion.
Right. The market doesn't like uncertainty, and you guys are in this business. You've been doing this for a long time. Is this sort of new territory for you?
It's not new territory for me. I've been doing this for 28 years, but the tariffs are somewhat new. Although the Trump 1.0, if you will, he did tariffs back then, and we saw similar drawdowns in the market when he first got into office. Back in 2017 timeframe, we did see tariffs have an effect, but then eventually the markets did react favorably. They rebounded. So that's the important thing for the viewers to realize, that not just everything's going to go to zero. It's not. Things will rebound. We just have to give it time.
We have another question from a viewer. He says he works at Honda and knows many local suppliers who get their parts from other countries. How will tariffs impact them in the long term, do you think?
So in the long term, I think things are going to eventually level out. In the immediate term, yes, the goods and they're importing might have that immediate increase, but I see tariffs eventually leveling out. And in the place like Honda, they've been more in the U.S. and been planning to be more in the U.S., building manufacturing plants, the Civic, in the U.S. So eventually those tariffs are going to not have as much impact on the domestically manufactured cars and car parts in the U.S. And that's been in the pipeline for several years. It just isn't a knee-jerk reaction. Let's start building cars in America because Trump tweeted about tariffs 2 weeks ago. Now that those have been long-term plans, so initially I think there's going to be an initial shock to the system, a little cold water down your back, but long-term I think prices and are going to level out.
Mike, anything to add about that?
Well, I mean, we have probably over 600 Honda associates across the country, so it's not just here in Ohio, 4 main plants. We got the Carolinas, Alabama. They build the Passport. They build the Odyssey down there. I got clients that they're certainly going to be affected, even suppliers. But the reality of it is, will parts that are made overseas be tariffed? Absolutely, they're going to be tariffed. So let's face it, price of goods are going to be going up on automobiles. That's one of the biggest sectors. It's not just even if you looked at General Motors, not every GM product. I mean, it's built here, but everything is international. So when you look at that, there will be some price adjustments, and GM even announced employee pricing for people. So I think companies can absorb so much, from their profits, but ultimately we can see some price increases. And if this is short term, hopefully this is short term, these tariffs, or we get to the negotiating table rather quickly because of the severe impact of what we're seeing with the markets. I think eventually, we might see a slight increase. We may not see an increase at all, depending if the manufacturer is willing to absorb that cost.
Yeah, I think when you talk about car parts, the first thing I thought of was, is that going to raise my car insurance because it may be more expensive to fix my car now because those parts just went up?
Yeah, perhaps.
Perhaps, yeah. We'll see what happens. It's still early. We have another question from a viewer. If the U.S. continues to raise tariffs on other countries and they do the same, what will be the deciding factor for one country to concede? Any idea?
Well, when you look at, let's just look at Mexico and Canada, okay? I saw a recent study that, roughly 20% of what comes from Canada comes to the U.S. So that's a pretty big amount coming from Canada that's coming into the U.S. that we're importing from Canada. So they have to negotiate. And same, I think it's about 25% coming in from Mexico. So when we're a major trading partner, hey, it's more of a give and take. Just when Trump, a little over a month ago, when we talked about the tariffs out the gate, in February, tariffs on Canada and Mexico, what happened? 10,000 troops, on the border wall on the Mexican side, same with Canada. Again, a lot of change happening in a quick period of time. So the more of an impact it has, meaning the more GDP that's coming from a certain country, meaning coming into the U.S., certainly it's going to have more of a tremendous impact on them, and I think they're going to be a little more willing to negotiate.
Daniel, anything to add about that?
Yeah, I think there's no one area where I'd say that this is going to be the catalyst to say tariffs are going to end and we're all going to come to the negotiating table. I think 22 states are, Canada's their number one trading partner. I think another 10 or 15 states, Mexico's their number one trading partner. So there is going to be a lot of give and take. Eventually there's going to be a leveling out, but initially there's going to be saber rattling, just like retaliatory tariffs. How is it going to totally impact the bottom line of each country and their trade deficit or surplus with either country? But I see it eventually leveling out after some saber rattling, and everyone wants to come to the negotiating table to calm the waters a little bit, because we are very tied in the global trade network with these countries.
We've talked a lot about individuals in terms of their 401ks, Roth IRAs. I'm wondering, from a small business point of view, what advice you would have for people who are trying to keep their businesses afloat during these times. What advice would you give them? I'm sure you deal with businesses as well, in terms of how they should be positioning themselves financially to protect their assets.
Well, I mean, it really depends on the business. I mean, if it's a local business, let's face it, goods and services have gone up, although we are seeing positive things in the economy. Inflation is coming down. Interest rates are coming down. We've had the opportunity to hire a few new employees as well, here recently. So, it all really comes down to the business as far as what they want, what they should and shouldn't do. I mean, maybe put some more money aside, if they're really affected by the tariffs, or depends on what service sector they're in.
Right.
It's hard to make a blanket statement, for those small business owners. But those small business owners, we can help them, show them tax saving strategies, set up pension plans, show them ways to really fund their retirement. Maybe they've put it off and put it off and put it off. I know a lot of small business owners, years and years ago, I used to be that way too. But now we have a team of people behind us, as far as staff and things like that. But making sure that those business owners are set up, financially. They've put it off, and they've put everything to their business, including their finances. Well, maybe now's the time to really start looking at what they can do today to really set them up for their retirement.
Yeah, Daniel.
I think, knowledge is power. So without knowing what specific business we're talking about, it's hard to give just blanket advice. But for some small businesses, they might be able to shift some of their assets quicker and make quicker plays, whereas a bigger firm or a nationwide country, they have to deal with the sum of all parts, and a small increase can significantly affect their bottom line. They may want to pass that right to their consumers, where as a small business, they have the freedom and kind of agility to be able to pivot for their business. I don't know exactly how that would be, because we're not talking about a specific business, but they definitely have the opportunity to make a short-term play, and they have the ability to make those changes probably in a quicker scenario than maybe a large business or a big box store.
Yeah. Okay. We've thrown a lot of questions out for these two gentlemen. They've done a great job answering them. Anything else you want to each add before we go in terms of what people should do in a time when there's a lot of nervousness out there?
Well, I think one of the biggest things, for people out there is, if they're a DIY, they do it themselves. Maybe now it's time to seek some guidance from a financial planner. Like I said, I've been doing this for 28 years. We've helped a lot of people who are in pre-retirement get to the finish line, meaning get them into retirement, or maybe they're in retirement and they're still trying to do it on their own. And now these markets are making people question, should I be doing this on my own? And then secondly, when you look at people that have an advisor, there's a lot of advisors out there that are, not reaching out to clients. I've had, we do a lot of seminars throughout Central Ohio, and we hear people, and I haven't met my advisor in 2, 3, 4, 5 years. And I really ponder, I'm like, wow, really, it's been that long since you sat down with your advisor, or the only time I hear from them is, if they want to sell me something type of thing. We're very proactive in doing reviews with our clients, and maybe that's an opportunity to get a second opinion. If you're not getting that guidance, you're not getting that call, you're not getting what you need, then maybe it's time to get a second opinion and see how one of us in the industry that does this can certainly help them.
Yeah, Daniel?
Yeah.
Yeah, absolutely. I think just like you get a second opinion of the doctor, you should get a second opinion on your finances. So you care about your health, you should also care about your wealth and get a second opinion there. Like Mike said, we proactively meet with our clients as well. We meet at least 2 times a year. So when we call them on days like today, saying, hey, are you feeling all right? They say, well, no, the plan in place that we created proactively together, I know it's going to weather what's happening right now, and we are thankful for that and see our future long term as successful. So, I mean, we cover 5 key areas that we think are the 5 things that you need for a successful retirement. So we're going to go over those with you if you come into our office. I mean, the complimentary visits to either give you a second opinion and say, hey, you're all set, or hey, maybe there's some work that we need on your investment strategy, your income strategy, your medical, your estate plan, maybe a plan for outstanding taxes.
Yeah. Daniel, Michael, thanks very much. So I guess the important thing is have a plan. Start with that, right?
Yeah,
All
I agree. Thank you.
Yeah, thanks very much. And we hope you answered your questions on this uncertain times. Stay with 10 TV Plus for more news. Thank you very much for staying with us.